All right, welcome back, everybody, to the Fintech and Dreams track. I will quickly introduce the next session here. This is one of my favorite topics, I think, in terms of fintech. The topic on partnership. This is always relevant and always an issue, I think. We have a great panel to discuss the issue on partnership, and to lead this panel, I will invite a fantastic Australian guy here, Nick Boudry. He will be up here in soon. I probably said his name wrong, but he will have problems with the other names as well, I'm sure. Nick is scaling his company here from Copenhagen, Australian company. And I think looking at the panel, I'm sure we will have the corporate view in there, and I'm sure you will challenge them, Nick. But before you introduce the panel, I think you should also just introduce your company and also kind of get the startup view in there. I know you have gone from a startup to a scale up in the last 10 years, so also give some of your views on the things you've seen as a startup working with the corporates in the last 10 years. But welcome, Nick.
Thanks, Simon. Yeah, I mean, our experience of starting up in 2010, we were actually very, very lucky in that we started a company and got a major Australian bank as a client back in 2012. So I guess we were able to work tactically with a small area of that bank and work with them on our product to organically grow and I guess co-develop our product very early in the market. So that I guess gave us a really good start between 2010 and 2015 to organically grow things and co-develop with that actual organization. And there wasn't any kind of funding involved in that, but they actually then ended up opening a lot of APIs to us as a business. We provide a customer onboarding platform for financial services companies. So when you open an account through the Lab platform, it would actually set up an account on this institution's core banking platform. So we were able to collaborate really well in the early days with them. And I guess we got that early ideal union, I suppose, which is the topic of the panel, in those first 5 years before the actual fintech, I guess the innovation labs and hubs actually popped up at these institutions. So yeah, our experience was up until 2015 where we worked with that large bank, and we were able to kind of scale with that bank as very good corporate partners. And then we had we saw, I guess the innovation labs come along, and we started to engage with those innovation labs, but they were very high level at the time and not really talking to individual business units. So I guess that's our experience, and we're talking today about the ideal union for the new partnership. I don't think there is maybe such a thing as the ideal union, but we'll hear, I guess, from where we are, where we've come from to where we are now from the panelists. And just to introduce them, we've got Kathy Chang, who's Senior Strategic Partnership Manager at DNB, Christian Loma, who's head of OP Labs at OP Financial Group. We've got David Rassen, who's the Centre of Expertise Lead Innovation at ING in Belgium. We have Christine Hurdop, and I think that every Danish person would be laughing at that pronunciation. She's the Chief Digital Officer at Veliv. And what I might do is just kick off with a question to Kathy initially. Just Kathy, if you could just talk about what the partnerships look like now, and how have they actually developed over time. I guess I prefaced the 2010 to 2015. So yeah, what have you seen? And perhaps I'll put the question to the whole panel as we work through, and perhaps just describe the context of your role in terms of that question. So Kathy?
Yes. Hi, everyone. I think partnership has always been here for a long time, and perhaps in the past, partnership covers more of a technology provider or like a vendor perspective. But over time, especially up till now, we started to see a growing trend of partnership that focuses on referral and distribution, what customer needs. So everyone is putting customer experience on top. That means you start caring less about yourself, but you ask more about what the customer needs. So when they come for things that you cannot provide, the first thing you think of is not like, okay, maybe I should pretend that I don't have a solution, or like I should prevent my customer from going elsewhere because I don't have it. But instead, you create a platform where other provider can come in, so you become an all-in-one platform that your customer can find all the services they need. Although sometimes the needs that it cannibalize part of your business, but people start to focus more on the customer experience.
Thanks, Kathy. Christian, I might just get your views on that question.
Yeah, I kind of have to chime in on the same thing. So I've been running the innovation lab for OP Financial Group for 4 years, and our role originally was about finding the opportunities and innovations and new growth potentials. And now things have matured quite a bit. So in the recent few years, it's been more about finding the dynamics of like which are the partners that can help really elevate our main business portfolio. So not only focusing on competitive startups and partnerships, but also finding like really specific solutions for the problems that we have in today's operating environment. And to be fair, that has required that the Innovation Lab changes quite a lot from their role for discovering the future to discovering the real needs of the business and being the innovation partner for the business. Overall, I think what has really changed is that the success stories happen when the business is collaborating tightly, and sort of the Innovation Lab is kind of like just helping to find the right partners and helping navigate that landscape that may be foreign. And yeah, that's what we really do. So we're trying to be an innovation partner for the business.
Yeah, we talked in our preparation about the fact that back in 2015 it was really the labs going out to the market and seeing what's out there, I suppose. Whereas it sounds like it's sort of starting to flip on its head a bit, where their problem statements in a business, and they're sort of starting to then pair up maybe like-minded or similar companies that can potentially work towards that problem statement. Okay, thanks Christian. David, might just move on to you. Yeah, what do partnerships look like now? And yeah, how have they sort of developed over time at your experience with ING?
Yeah, happy to do that. So in fact, our accelerator program started indeed in 2016. At the time it was called FinTech Village. And I do think indeed, echoing what has already been said, we were getting excited about fancy solutions in the market with crazy opportunities. And what we learned, the painful way, is that it comes with a price to pay, because we were pretty successful, I think, in delivering the POCs. But then the real difficult journey started, how to scale these solutions and how to make them land and expand in the business. And that's where we evolved, I think. I think we are now working more with mature companies. So in fact, you could even argue whether it's still a proof of concept. For me, it's rather proof of value, because most companies we are working with already proved that their concept is working, because they already have paying customers. And we have more global ambitions. It might be an ING thing. We try to build a pan-European bank. So as soon as I deliver a successful POC, the first question is, can this scale to other business units inside ING? And echoing also what Christian said, we are closer to the real problems of the business as opposed to spotting fancy fintechs on a conference. That, I think, are the most insightful evolutions we went through over the past 5 years.
Yeah, David, just to follow up on that, I mean, how do you, I guess thinking from a fintech perspective, how do you get over that hurdle of, I suppose, that first customer? So you've got problem statements, and you've got, you're going out to market, and you might have that first partner that maybe doesn't have that big institution on their books. For us, at least, we were extremely lucky in 2012 on a tactical solution, which seemed to encroach its way as a proof of concept in through the business and then into other business areas? Like how do you kind of tackle that problem of not being the first and partnering with an early stage startup?
Well, what we also, I think, where we also matured in is making it a more conscious choice. When do you innovate and partner with a fintech directly from a business unit, and where do you protect it from the business unit and try to at least allow the fintech and the partnership to make its first steps in a protected environment? Because if you do that, for example, I'm in charge of indeed ING in Belgium and the domestic bank in the Netherlands. So before the crisis hit us, we had a 2.5 billion euro bottom line. It will be a bit less this year, I'm afraid. But if you come with a early stage company, then a little bit disruptive, yeah, really, it's very difficult to convince the business unit that this is the next big thing they should spend money and attention on. And that's what we try to do with our lab approach. We try to keep the connection, but we try to protect it. At least it has received the opportunity to really show value before we bring it back to the business unit. Because the downside of this approach is clear as well. If you keep it in isolation, you might end up being what happened with Xerox PARC one time ago. So that's always a difficult balancing act. But I think we're not perfect. We are never perfect. But I think we are improving, and at least we are having a conscious decision-making process on this.
Thanks, David. Christine, sorry about the surname pronunciation. Yeah, just your view on what the partnerships look like now from your perspective, and how have you seen those develop in your time at Veliv?
Yes, well, thank you, Nick. No worries about the pronunciation. Well, actually, I think we have matured quite a lot in Veliv over the last maybe 5 years. I think we came from an initial mindset where we thought that fintechs was something that was never going to make it in pension because it's highly regulated. So we kind of felt safe. But we have moved towards a mindset where we now see it as an opportunity to have solutions that might be hard for us to develop ourselves, or to reach market share in places where we wouldn't traditionally go and get a market share. So I would say we have gone from this mindset to now having our CEO be part of the board of directors for Copenhagen FinTech. And over the last year, I would say we have had almost an exponential learning curve, because we have gone from no partnerships to now 4 partnerships with startups and scale-ups. And actually, we have 4 different partnership models, which is quite interesting, I think. One of them is that we have actually invested in a startup for them to go and get customers in a market that we wouldn't reach ourselves. One partnership where we have run a POC, which has actually led to a product that we are going to launch to our customers. One partnership where we have just cross-references to each other, no money involved, just trust-based and just cross-reference. And then the last type of partnership where we pay license to use the platform, but we have also agreed to enter into a development partnership where both parties will benefit from each other's AI development.
Okay, so yeah, procurement models is a really key thing there, isn't it? The lightweight, that sort of one-size-fits-all big global procurement team where you go through, 12 months of due diligence and lengthy contracts is obviously a blocker. I've had my fair share of RFP processes to go through in relation to that. So it sounds like there you've got some, it's breaking away, I suppose, from that traditional universal vanilla procurement.
I think actually we have gotten more of a sense of proportion mindset within Veliv, where we can try and speed up some of these processes. And as we get more mature and we've tried this more and more, of course it gets easier every time.
Okay, thanks guys. So we probably did touch on a bit of this question, but what are the best lessons learnt from partnering up? We've all had our good and bad experiences with I guess, fintechs, and then the other way around as well. I think in my experience, if you can, it can be quite damaging to a business to obviously have the wrong engagement model and business model from the outset and not be able to sort of back out of that, and it can be crippling to kind of customer acquisition costs and versus long-term value ratios for a sort of business to business or business to business consumer SaaS startup. So Kathy, I might just jump back to you at DNB. Some lessons learned partnering up, maybe some things that didn't go so well, and what you learned from that, and how you've adapted some changes.
Actually, I'm gonna share some good examples of partnering up, and maybe Kristin has touched upon it. So the best part of partnering up is definitely competitive advantage in economical term. Like, you should do whatever you do best and let the other do whatever they do best, and you exchange your expertise across. That's the most effective way. And I think it's become more and more important because technology has become so profound in events. It's so impossible for you to build something so deep inside the bank yourself. For instance, the AI in the past, maybe you can do some very general AI and start selling, but now you have to be very specific use cases in certain industry in the AI to be able to sell it. So how can you develop everything yourself when other company has a bunch of PhD? A very knowledgeable person do it in whole day, 24 hours. The best thing for you, instead of catching up, you should partnering with someone and exchange your expertise. That's a good lessons that we have learned from partnering up.
No one wants to give the bad examples, do they? But I just halfway through Checkpoint, I actually had a poll set up. Are you a member of a startup or incumbent? We've got 75% startup and 25% incumbent, so the audience is on my side. So yeah, I think that's interesting. And also fire through questions as well in the discussion forum, and I'm happy to put those through. We've mostly got comments about the ACDC background of David at the moment. So another question, so where are we going now with partnerships? I mean, again, talking about experience, we've had long-standing 5 to 10 year relationships with global financial institutions, and we've had to actually re-commercialize and recontract a number of times, I guess, to evolve as those synergies have popped up in organizations. And I think the labs and the incumbents are doing a really good job now of joining the dots between the sort of business units. So I guess, yeah, just a question, I might put this back to Christian. Where's this going? Like, do you see partnerships increasing? When we say partnerships, are you seeing a common model that you can see being a lot more successful? Have we kind of hit our stride now, or are we still learning a lot? Yeah, where are we going in the future with partnerships?
Yeah, I think to build on what Kathy was already saying and what David referred to, what we're going to see in the future is partnerships between much more mature fintechs, which are doing something that a lot of banks or a lot of insurance companies need as a common resource. The sort of stuff that is not going to be the sharp edge of the competitive edge for the banks, but they will understand quickly that there is a startup doing this as a platform play. And that will be all across the different functions of banking. That will be in KYC, AML, digital onboarding. It will be in payments and sort of, stuff that we sell as bulk. I think over time we will realize that by centralizing these efforts into startups that do much better job at much more efficient way and with a better quality, we are able to be more scalable and agile as companies. So I think that's my observation of the category that is emerging. And if I were a startup, I would really deeply look at my sort of proposition to be as boring from the banking point of view instead of being the exciting and fancy thing, because boring is where the potential is.
Yeah, I mean, we provide a standardized customer onboarding platform to financial services companies, so it's quite interesting how you say what functions can you standardize and make universal. I think maybe as a follow-up to that, some of the challenges that we've had is in a typical software as a service, it's the group feedback to your product that adds to the value of the product, and you can reduce your prices obviously because you have scale across organizations.
For sure, and I think for the longest time we've not had the maturity in banking, so I think now the opportunity is starting to be real.
Yeah, David, perhaps I can get your comments on that, the standard model. So and also with open banking around and other things where we're enabling fintechs to do a lot more without even talking to a bank, because they're not relying on a bank to surface APIs. They just simply become accredited and jump into the open banking framework. What are you seeing in terms of, I guess, jumping onto those standardized models and frameworks that are, I guess, a little bit more of an external engagement from potentially an ING perspective? Just your comments on that.
Well, I totally agree with Christian's point, and maybe some additional takeaways. Maybe also trying to give something to the 75% startups in the session. I think I'm afraid there will be, because that was your initial question, I think there will be less partnerships, and I think it will be something like a scale or die game, because there are still too many zombie partnerships that are leading nowhere. And I think in order to help the startups, maybe, I think they should get better in choosing the right incumbent partner as well. And I think there's a very easy tip to get there. If startups are applying for an accelerator program, we typically ask them a bunch of questions. I think to participate to our program, it's something like 37 questions. I always suggest the startups to mirror those questions and ask exactly the same questions to the incumbent bank. For example, then we ask them, how about your funding? And then the question from the startup to the incumbent should be, is there money left at the table after your demo day? Because if you mirror those questions, and I could go on for that, you will probably more easily spot the right incumbent bank, and the ones that are really serious about it, and the ones that are still in there, but I think they will disappear very fast with this COVID crisis, the ones that are still there for the theater part of it. And the other thing I think is important, building on my remark that it's not about the number of partnerships, but about impact. So it's not about the number of POCs, but it's about the number of real commercial contracts. I think going to a conference is easy. I compare it with a relationship. That's where you flirt, and then you might fall in love, and then engage to a POC. Then you might marry. That's when you sign the contract. But the real difficult part is staying happily married. And that's why I think what we still need to learn as an industry. We all now have a bunch of partnerships, but how are we going to grow together from something that started small locally, in my case in ING Belgium, and how are we going to grow together to build it as a scalable solution across ING? And that's still, I think, a massive challenge that we share together with the fintech community.
Thanks, David. Yeah, we're going to have to figure out how we flirt, don't we, over video conferencing. But we've actually got a question that's not AC/DC related. So it's from Sergey. The pace of a bank is measured by months and years when it comes to evaluation of new solutions. The pace of a fintech startup is measured by weeks and days. How do you close this gap? Christine, maybe I can get your comments on that one.
Yeah, you can, of course. And it's very correct, and that tend to be a problem. We've seen it ourselves in these partnerships that we have made. I think it's a lot about managing expectations. It's about mutual trust that we both want to make this work. And then, as I touched on before, it's about sense of proportion, so that the incumbents, they see that they don't need to take out the legal form that's 58 pages for maybe just doing a proof of concept. So I don't know how to close the gap. We're still working on that, but I think as we do more partnerships in Veli, we're finding a model where we can act more fast in trying to make these agreements. But it is a hurdle.
Yeah, I mean, we work in the Asia Pacific region at Lab Group, and Apix is an interesting platform that they have in Singapore that kind of is and that's a tip from Andrew Davies, which is actually an Australian that's just messaged us through. Yeah, Apix is really matches up fintechs and banks in a kind of marketplace. So maybe platforms like that might evolve as well. It's been a really great discussion, and unfortunately we are out of time. So I'd just like to close things up there, and yeah, just really want to thank all the panelists for their insights this afternoon, and we hope you enjoyed the panel discussion.